Today, I want to talk about how the AMC and Gamestop squeeze timeline is still on, and how there's a massive disparity in AMC's true share ownership, and finally explain what's actually happening to all of those shares. So stay tuned and let's make some money. Also guys, it's the last few days of the Labor Day sale over at the Millionaire Mindset Trading Group. Just be sure to use code LABORDAY, all in capitals, all as one word, at checkout for $100 off the price of the lifetime membership or 25% off the monthly membership. So let's dive straight in with the key information and start by recapping GameStop's recent earnings, the position GameStop is currently in, and what they've just announced. So as we can see from Kevin Malone, GameStop has just announced a profitable second quarter and that the GameStop company has $4.2 billion in cash reserves. We can see GameStop's net income or net profits for the quarter was $14.8 million, compared to a net loss in the previous quarter of just $2.8 million. And not only does GameStop have $4.2 billion in cash, but it's also cash generative or cash flowing this quarter. Now obviously GameStop generated $3 billion with their recent at the market offering, but even ignoring this $3 billion, they still generated positive $68 million from operating activities. What that means is that just by running their business, selling stock, collecting money from debtors and paying money to creditors, they still generated positive $68 million. That means that GameStop has no debt, it doesn't require any future debt because they're now self-sufficient and self-cash generative. And on top of that, they've got $4 billion in cash. Now the interesting part of this is that GameStop just announced another at-the-money offering, aka announced they're selling more shares, even though right now they have no current plans for their cash reserves. We can see from their S10 filing under the use of proceeds section, they've said there's no current plans, commitments or arrangements to make any acquisitions or investments. Now, to me, it doesn't really make sense why they issued another 20 million shares of GameStop, but at this point, it wouldn't surprise me if even the hedge funds are just begging them to issue more shares. We know these shorts have dug themselves into a massively deep hole they cannot escape from, and it wouldn't surprise me if the short sellers have been begging GameStop to issue more shares that they can buy on the cheap to try and escape their positions pre-squeeze. But obviously we know these shorts cannot escape their short positions, as us retail investors hold the majority of the shares, the majority of the float, and will not sell until the squeeze happens. Therefore, while they may be able to buy 20 million shares here and there, their core short position they cannot escape from until the squeeze. And what's obviously even more encouraging is that regardless of the 20 million share offering, we're still in this emoji squeeze timeline. Arrow Flip is suggesting that right now we're here at this fire burning stage. Obviously this 20 million share offering has caused some chaos, and that chaos could be explained by this emoji. Everyone thinks it's burning down to the ground, but actually we're still in the squeeze timeline. Now I know the US election hasn't happened or the anniversary of the US national anthem hasn't yet occurred, but this is just one possible other scenario. Right now we could still be at this dog emoji, or right now we could be at this fire emoji, but either way, sooner or later we're gonna see the explosion emoji. And something that's also very interesting, which I have a newly formed theory about, is this massive change in AMC share ownership. So right now, from various different sources, we have massively varying AMC share ownership. So IBKR is showing that AMC is held 40% by institutions and 60%, give or take, by retail investors. Now Webull is still suggesting a 99.45% retail shareholding or retail ownership, and only 0.53% held by institutions. And again, Crystal Ball has provided 3 more different sources, again all with differing institutional ownership as well. This first source has 70% or 71% retail holdings, and therefore 30%, give or take, insiders and institutional shareholders. Now, this second source has not just 30 or 31% institutional ownership, but 33%. And the third and final source, again, has a 40% institutional ownership. So it seems this institutional ownership varies from less than 1% up over 40% and pretty much everything in between. Clearly, none of these data providers know how many shares of AMC are really out there, including synthetics, and therefore have no idea really what to show as the institutional shareholding. Do they go by what Adam Aaron has said as fact, which is that over 90% of the float is held by retail investors? Do they go by the 13D filing suggesting the float is held 40% by institutions, or some kind of blend in the middle? I also wanted to talk about the 40% gainer we had in the Millionaire Mindset Trading Group on BCTX. Now, I told the group I was watching BCTX as it had released new cancer breakthrough news and that I was watching for the breakout of $1.50. Later in the morning, the price broke through that $1.56 level where I alerted the group, where it went on to make a 40% gain. So we can see Foxy Grandpa locked in $1,650 of profits, making back his entire lifetime membership cost in just one trade, and Harhan also locked in a 30% gain. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below, remembering to use code Labor Day, all in one word, all in capitals, at checkout. Again, I was also just looking through Fintel and I found yet another source for retail ownership for AMC, which is either 0.5% or 50% of the float is held by retail investors. Again, I don't know if 0.50 is in this instance 50% or just 0.5%. Either way, it's just another data source that clearly cannot figure out how many AMC shares are actually held by institutions and how many are actually held by retail investors. Which now brings me on to my latest theory, which is something we do know for a fact, which is that tons and tons of shares, tens of millions, if not hundreds of millions of shares, are held by institutional investors, especially those like Vanguard and BlackRock. Which brings me on to the next part of the theory, which is also something else that we know, which is that every single time over the last few years, the AMC has tried to push above the 200-day moving average, or every time it's tried to break out of the downtrend, it's always pushed back down. Obviously, this is those shorts and those hedges suppressing the price of AMC, trying to keep the price down and below the 200-day moving average and trying to stop it from breaking out and causing the squeeze. Now, obviously, the way you suppress the price of a stock or the way the price of a stock is decreased is through selling pressure. Now, there's two different types of selling pressure. It's obviously the selling of shares and the shorting of shares. Obviously, for a long time now, we've known these shorts have been shorting more and more and more and more shares, selling the float multiple times over. And that's how they've suppressed the price of AMC and pushed it down below the 200-day moving average and down below the downtrend again. But what I also think is happening is a massive increase in regular selling pressure of regular shares being sold as well. Now, obviously, it's not retail investors selling those shares, I'd imagine. I'd imagine who is selling those shares and who has the capability to sell tens of millions, if not hundreds of millions of shares to push the price down is Vanguard and BlackRock. When the price of AMC does this and spikes up and shorts find themselves underwater and incapable of shorting more because they've already shorted the float multiple times over, or maybe they can short more but they can't short more shares quick enough, especially not legally, who can come to their rescue and push the price down by selling tens of millions or hundreds of millions of shares? Well, the answer is BlackRock and Vanguard. And when BlackRock and Vanguard have sold their shares up here at, say, $7 per share, and the price has been pushed back down to, say, $5 per share, Vanguard and BlackRock load up again and buy more shares at the bottom. BlackRock and Vanguard can effectively repeat this over and over again, selling high and buying back low, only to sell high again and buy back low again. And it also wouldn't surprise me if BlackRock and Vanguard are being suggested to do this by the Fed and the SEC as well. Obviously, the Fed and the SEC have previously pointed out that short squeezes pose a risk to financial stability. That was in many of the Financial Stability Committee oversight reports, especially in 2021, but also in 2022 as well. So it wouldn't surprise me if BlackRock and Vanguard have been specifically told by the Fed and the SEC to stop short squeezes. Now, I don't yet have any proof to prove this as fact. It's just another theory I was hypothesizing the other day that I thought I'd share with you all, as these are pretty much the only two shareholders out there that have the capability to sell tens if not hundreds of millions of shares to stop a short squeeze and suppress the price in real time legally. Because technically there's nothing under Regulation SHO that stops Vanguard and BlackRock from selling loads of shares all at once, as long as they're not illegally shorting shares to do so. Obviously, if BlackRock and Vanguard own those shares fair and square and have purchased them in the open market, there's nothing that stops them from selling those shares. So this is just another way these shorts and these hedge funds try and control the market and push the price in whatever direction they want it to be pushed in. But something we're noticing more and more is the Fed are desperately trying to stop regular retail investors and regular everyday people from realizing the US is currently in a recession. Gary Gensler's speech notes were uploaded to the SEC's website, and in there was actually markups from Gary Gensler himself, saying, and I quote, "I strongly recommend that a sentence be placed here to reassure markets that you are not making this speech because you think there's an imminent crisis. We know the market is on the brink of a crash. We know these banks are on the brink of bankruptcy. We know these losses are reaching into the hundreds of billions, if not trillions of dollars already, and it's only a matter of time until this unfolds." But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.